I mean, and I think you're right on that, is that you have this scenario where right now crypto's gotten crushed, people have gotten hurt with FTX. Like, there's going to be more vocal naysayers, but I still think that a huge amount of politicians, when it comes down to it, recognize how many jobs are now reliant on blockchain technology. You have all these big companies like Microsoft getting into the mix here, and all this lobbyist money too from these companies. So I think when it comes back to it, that's what's going to rule the day. It's going to be jobs, right? Because how does a politician get reelected? It all comes back to, are they preserving jobs? Are they keeping jobs and helping sectors become bigger and bigger, especially in the U.S. Because, right, we don't need China, or we don't need other countries taking the advantage here. We've got to be on the leading edge of blockchain technology.
Bitcoin is headed to either $28,000 or $19,000, and this week could decide all, Fresh Analysis says. Hello and welcome to Crypto Street. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
Yeah, so I'm not a huge fan of death crosses or golden crosses overall in technical trading, right? The main reason is because they're so publicized by the media that, and it's kind of, you notice the coin, right? The death cross, or the golden cross. So it's really, it's more of a media thing. The only time I pay attention to death crosses or golden crosses is when price is coming into that cross at the exact time it's crossing. So I don't know if you guys can show my chart here, but actually, I can show my chart. Funny thing. But basically, like, all right, so let's imagine here's a death cross, right? So the death cross is right at this pivot point right in the middle. The only time that it's important is when price is coming up to it. Then that's a no-brainer short where it's going to fall to the downside. So those type of situations I really pay attention to. But like you said, golden cross on the daily, a death cross on the weekly, how do you even figure that one out when there's multiple signals in both? The one thing I will tell you is that I haven't bought this rally, meaning I don't buy that all of a sudden we're in a new bull market yet in crypto, right? So the main issues I have is that while this was an absolutely remarkable rally up, in the scheme of things, if you zoom out on the chart, it's still a relatively small move, and you could arguably say that this move here is the same size as this move here. I mean, it's not much different in dollar amount to the upside, nor is it this low to this high, right? So for me, it's nice to see, but it was coming off of the December kind of tax loss selling. So once December's over and people have sold for tax purposes to reduce what they owe the government, there's just naturally this void of sellers. So it allows for rallies to take place in the stock market, in the crypto space. And then again, you don't have transparency. We hear, now Kraken's being targeted. We hear all these other things. And so at this point, I'm not ready to buy the whole narrative of, we're now in a new bull market and here we go. I want to see more proof of it before I put myself behind that. Yeah, so one of the interesting things that you bring up is sentiment, right? And sentiment is so important. And what I didn't like about this rally is that we literally, what did we go up? 35% off the lows. You had the same bullish sentiment in the market that we had it when we were at 65,000. And that people jumped on the bull bandwagon far too fast. If you go back to 2001 after the dot-com collapse, 2009, the first move in any beginning of a bull market that occurs, most people are scared. It's shitless. I don't know if I can say that on this program, but hopefully I can. All right, so they're scared shitless about that first move. It's too scary. They think, oh my goodness, this has to be a fake out. In this situation with crypto, everyone was like, new bull market, here we go. Here it goes back to all-time highs. That's a dead indicator it's not a new bull market, right? People haven't been, gone through the despair and the kind of the giving up phase of a bear market. So that coupled with the fact that we now need to establish ourselves and actually make higher highs, that would be something that would get my attention.
Despite returning above $22,000 on the back of the February 14th United States Consumer Price Index (CPI) print, Bitcoin has yet to resume the blistering rally which saw it gain 40% in January. After 2 weeks of consolidation, however, the time to make a decision is here, Skew believes. I think we're setting up for the next big move, he summarized alongside a chart showing relevant BTC price targets.
That we did take out, so the one positive here, and this is what's interesting, right? So this area here, and let me just draw some rectangles here. So this area right here, that was where FTX collapse began. Here, notice how when we came back to that, it was resistance. It was tough for the markets to break through, but eventually it did. Look at where we find ourselves back to, right at that same level. So this is an important level for Bitcoin. If there's one level you're following that could tell us there's a bull market here, if this level holds and we can go take out the high right here, from which was around 24,300, that would be a positive. If this yellow line breaks and price starts trading below, you're honestly probably headed back to sub 20,000 on Bitcoin. So this level, again, we'll call it like 21,400. Watch to see if that level holds for the next week or so. If it doesn't hold and we break, be very careful. No, I actually am still in the camp that we still have some further downside to go. Yeah, definitely in that camp. Again, just because I haven't seen the flush out, and one of the biggest concerns I have about the crypto market is not that we're not going to get regulation and transparency. It's actually my worry about the overall economy and then the impact on the stock market. So what I'm seeing coming in the future is that we're going to slip into a recession, right? Probably second half of 2023, we go into a recession. The markets are going to turn to the Federal Reserve and say, okay, could you print us out of this recession like you've done every down move in the economy over the last 15, 16 years? And the Fed is going to say, guys, we would love to, but the problem is inflation's still, let's say, 3% or 3.5%. So we can't. Now the market's faced with what I would say is like this long, drawn-out recession period where earnings are going down. And you might say, well, what the heck do earnings have to do with crypto? Well, the problem is if investors start to dump stocks and we say, let's say we see another 25% down move in the S&P, now figure out how crypto holds up in face of that, right? So if we see a mass exodus of risk assets, it's hard to imagine crypto doesn't get caught in that wave. The dollar, which is really instrumental in what the market does. And notice today, the daily chart of the dollar, we have a red candle today, and so the markets are up. The stock market goes up. Basically, what you'll notice is there's an inverse relationship with the dollar. So when the dollar goes up, markets fall. When the dollar falls, the markets go up. Well, this pattern formation, this 3-bar move up with this sideways chop is known as a bullish consolidation pattern. So this pattern, the probabilities of this pattern playing out would be to the upside. So what that tells us, if we extrapolate that out, and we know that when the dollar goes up, the market sells, if we do get a pop in the dollar, you would assume that we would see an asset sell-off tomorrow on the CPI. So that's correct, yeah. So the dollar at least is confirming what you're mentioning about maybe we see a not-so-great CPI number tomorrow.
Those targets come in the form of $28,000 and $19,000 to the downside. Both somewhat echo others' perspectives from throughout the 2023 recovery, with the area immediately below $20,000 of particular interest. Current spot price levels, meanwhile, show that Bitcoin is testing a pivotal area here in a big range, Skew continued. Next couple days will be important, he added.
What's interesting is that if we did break that, right, if we break this level, which was what that would have to happen, then your next technical support on Bitcoin would be right back in this range. And what we can see here, right, is that you have the middle point of this little bounce here and the lows right here, which would be about a 10%, little over a 10% decline. So yeah, it's definitely something to keep an eye on. And you're right, when you go to the S&P 500, you're absolutely right. Gaps, I always say gaps are made to be filled. When you get close to a gap fill, there's almost this magnet effect that pulls towards it, and it's happened for generations, and it will continue to happen as long as the psychology of the market remains intact, which it will. Yeah, so what I'm seeing here on the ETH chart is you're starting to break this upward channel. We broke that line right here, and then we're now breaking this little low right here. So there is a level where you would look for a technical bounce on ETH, and it's right down here, right? And what you can see here is that if you connect the lows right here, there's an upsloping trend line. And if you connect this area, there's a flat trend line. And one of my favorite things about this is that trend lines coincide. When you have trend lines that work together and they merge, it becomes an even greater support. So think about it like this. If you have a wood floor below you and you take a sledgehammer to it, at some point you're going to break through that wood floor. If you were to put a wood floor with a cement floor underneath, it's going to be really hard to sledgehammer through that thing. And so that's what the equivalent of two trend lines converging right here would be. So on a technical basis, if I saw a dump on ETH to around 1320, 1330, I'd be a buyer for a bounce there on that chart. Absolutely.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.